Hello, ladies and gentlemen. Welcome to our morning European Outlook. I'm Joseph Novich, Senior Analyst at GDMFX. With today's headliner is the US dollar, a gouge of the USD, headed for its highest close in more than 5 years after China said imports and exports unexpectedly fell in November. Underpinning, of course, demand for the currency of the US, where growth is beating forecasts. The dollar rose to the strongest in more than 7 years versus the yen, before reports this week forecast to show US consumer confidence and retail sales both improved. The USD reached new 7-year high last week at 121.85 yen. The New Zealand and Australian dollars slid to the weakest levels in at least 2 years after the data from China. Exports and imports, of course, both disappointed, and China is the two nations' largest trading partner, as we know. The New Zealand dollar slid 0.7% to 76.55 US cents after declining to 76.43 cents, the largest since June 2012. Australia's dropped 0.4% to 82.81 cents after weakening to 82.75 cents, the lowest since July 2010. The Bank of England's willing to put aside its own forward guidance to determine how well the country's 8 largest lenders would fare in a crisis. Governor Mark Carney has said rate increase from the current record low 0.5% are likely to be gradual, and the peak in the rates lower than in previous cycle. Yet, in its stress test of UK's 8 largest banks, the Bank of England assumes an increase 4% by the end of 2015. The pound continued its decline versus the USD this morning and right now is traded at 1.5552. The euro versus the USD is well below the 123 level at 122.54, as Mario Draghi is about to get an idea of how far really fall short of his intentions. A round of net long-term loans by European Central Bank to lenders this week won't even cover the payments they owe from a previous program. In the commodity sector, we're eyeing gold, where speculators boosted bullish bets on 3 months high on signs central banks will act to counter low inflation, reviving the allure for bullion in a hedge. Net long positions rose by 20% to 79.49. Futures and options in the week ended December 2, the highest since August 26. According, of course, to U.S. Commodity Futures Trading Commission data. Holdings more than doubled in 3 weeks in gold. West Texas Intermediate extended declines from the lowest close in more than 5 years on speculations that U.S. oil producers will fight OPEC for market share. U.S. oil production accelerated to 9.08 million barrels a day throughout November 28. That's according to the data from the Energy Information Administration last week. That's the fastest rate in weekly records that started in January 1983. The price right now is $65 per barrel. That's all for today. Nothing major in the calendar. However, keep an eye on the low volatility data. Thanks a lot for watching. Bye-bye.